Hello and welcome back to the Note. We've had another rather tense day on world markets, falls for stocks, falls for bond yields, and that's despite what appeared to be reasonably good economic news here in the States. If we take a look at this first chart, you can see that the ISM, the Supply Managers Survey for the non-manufacturing sector, which accounts for more than 3/4 of the US economy, continues to show really quite robust health, comfortably above the level of 50 that is meant to show the gap between recession and expansion. As you can see, over the last 20 years, it's been a fairly good indicator of whether there is a risk of recession. Both the two times it went significantly below 50 were when we were in the early stages of a recession. So why is the market behaving in many ways as though it is worried about a US recession once more? Well, let's take a look at earnings results. This is the trailing 12-month earnings per share for the S&P 500 going back 30 years. And you'll see something quite interesting here, which is that earnings declines are rare, and they only in the last 30 years happen when there is a recession either oncoming or actually going on. We have now at a point where earnings have declined yet again. They're lower than they were more than a year ago. Usually that is a sign that a recession could well be imminent, even if obviously the earnings decline we've seen so far is nothing compared to what we saw during the last two recessions. Now, if we now take a look at sales, you'll see something else quite intriguing. The middle line here is for the S&P 500 itself. You can see that sales growth as a whole has stalled. A big part of this is obviously that energy, which I've not included here because it would skew the whole chart, has collapsed thanks to the fall in the oil price. But it isn't just energy. Financial sales have never recovered since the credit crisis, and tech sales growth, on which many had come to rely, has also now stalled and gone into decline, causing great concern. Obviously, you'll remember the very negative reaction to the news that iPhone sales were actually going downwards when Apple announced that. I suspect, even though there is the positive news coming out of earnings season, that earnings are somewhat better than had been expected and that margins are somewhat better than expected, that companies still have their pricing power, I suspect that quite a lot of the angst over a recession, even though it doesn't show up really in any of the economic data, comes from this very strange picture where we appear to have a very clear recession for corporate America, even though there isn't an obvious recession for the rest of America.